Good morning, guys. Welcome in. Welcome. How's everybody doing? A lot to go over this morning. Insane open, insane pre-market. This is an interesting session. Welcome in, guys. Welcome in. It's a beautiful Thursday morning. It's a beautiful long-term day for me today. A little bit. You guys probably know why. Anybody in INTC? Anybody in Intel? I mean, I think many of you guys probably are in Intel. We've been in Intel before the government news, the government announcement of the stake in Intel, and today we're finally getting that payoff. So I'm going to be a big profit taker of INTC today. This is a big exciting move. So obviously, right, big move on Intel, big move on Crowd. CRWD also ripping this morning, so I'll be profit taking this one as well. Who's missing? There's a few missing. Lulu, what's going on with Lulu? We need more. Lulu, obviously, a new big position that I'm holding. And Target, TGT, I am in the gutter still. So it's not always sunshine and rainbows, right? You have names that are ripping. You still have some names that are stuck in the mud and just waiting for Target to be pulled out of the mud right now, right? But obviously Intel and Crowd are absolutely juicing. It's going to probably be a very big day for me today, okay? So SPY, on the SPY chart, there is a lot going on in SPY yesterday. SPY during the FOMC announcement actually sold off very aggressively, but we got bought up off of a major demand, okay? And the thing that I want to talk about today is I want to talk about what's going on here in the market and what my expectations are for today and what my expectations are for even a week or 2 weeks out. Because I think it's important that we discuss this. And we don't want to have like a sort of a set in stone mindset. We have to be able to navigate the market in a way that basically reacts to levels, of course, as you usually do, right? But today, I think it's incredibly important we talk about all the scenarios that could potentially happen because we've seen major gap ups like this before. Think of it like this, right? When you look up in the market, when you look up in the sky and you see something falling on you, right? Maybe they're like someone's throwing a knife or something, or someone's like a ball, right? Everyone tries to catch the ball, okay? And that today, what's going to happen is that's probably what's going to happen. And if you're like me and you don't have good eye coordination, you're going to try to catch the ball, right? Someone throws a football right at your forehead, and it's going to smack you right in the forehead, okay? Today's session is going to be about, do we hold demand below? Because if we don't hold demand today, we are going to fade, right? We're going to fade a lot of this upside move, and we're going to see the gap back into the key levels, back into 661, back into 659, and possibly even back into our FMC lows. So even though the market is bullish this morning, right, we have to discuss where it shifts from a bull back to a bear mindset, okay? So that's the key thing we'll talk about today. Obviously, we'll go over AMD downside. We'll go over INTC, major move here. SMH, very hot, right? So semis are hot, but AMD is not. Nvidia obviously moving a little bit higher as well with the INDC deal. But of course, we still have 176.50. That is the key level to break out today. So that being said, what I want to do is I want to go over econ data, earnings reports, and then we're going to dive into our charts. We're going to have a great pre-market. So in terms of econ data for today's session, the economic side is important, okay? And the reason why it's important is because, let me just make my face smaller, just so we are in the same page. Let me just do this quick. Bam. Okay, cool. We should be good now. Awesome. So econ data yesterday was obviously the centerpiece of the week. That was the FOMC rate announcement. And what we suggested in the pre-market was right. I mean, not necessarily that we knew we were going to be right? It was going to be a 25 basis point reduction. And the question was it going to be hawkish or dovish? In my opinion, it's even still right now, to just be transparent with you guys, I don't think that he was particularly dovish, right? So the market reaction here on the S&P 500 is actually mostly due to semiconductor strength and not due to the FOMC meeting. Very important, right? It's a very important discrepancy we're making here. I don't think that the meeting was very dovish. I think this was actually a hawkish rate cut. Still bullish, right? The rate cut's still bullish, but it was not as dovish as I think people are making it seem. And I think oftentimes we look at the market, you see the market gapping up. So our assumption is that the rate cut was bullish. but it's not really why the market's moving up right now. The market's moving up because of all the chip strength, all of the Apple strength, right? That's what's going on here in the market, not really due to the FOMC meeting. Now today, Thursday, we have some new data. We have the jobless claims here at 8:30, which was about 8 minutes ago. And besides that, we have 10 o'clock data, leading indicators. And then we also have some other data at around 11 o'clock. So that's what we have today's session. Now tomorrow, it's even more important. Tomorrow we have quad witching, which is going to be very important. Be careful of quad witching. You guys know what that is already. We'll talk about that tomorrow session. Of course, it just means there's a lot of options expiring tomorrow session. So a lot of volatility for our Friday session, okay? In terms of earnings reports, there's nothing here to talk about. We're actually going to skip through this because, I mean, obviously today you maybe want to watch maybe FedEx tomorrow. FedEx today. FedEx today. Why do I keep thinking it's Wednesday? Today is Wednesday. Today's Thursday. Tomorrow was Wednesday. Yesterday was Wednesday. Today is Thursday. Jesus. And of course, we have FedEx in the after hours today's session. Okay, so I have my dates all mixed up here, right? So on the SPY chart, let's talk about what's going on here in SPY. So I had a pretty big short position on SPY long term in my account with October puts into the FOMC meeting. We actually sold off very aggressively into our FOMC meeting because a lot of the comments he was making were particularly hawkish, right? They actually were hawkish comments all session. But then we came into a key level around 655. And this was a level that I knew I wanted to take a lot of profit into. And the reason why was because it was simply just that Wednesday, the 10th highs. And we have now turned that into support. Now, the question is, we bounced off this level, and we obviously formed a long here at this level, right? This has turned into a long here on the market, and we're rallying higher in the pre-market session. Okay. The question now becomes where are we going to, and what makes us bullish and what makes us bearish? So uptrend, 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 and we almost lost uptrend yesterday, but then the FOMC meeting basically caused a wham, right? Big downside, back into support, the Wednesday's highs, and an aggressive buy up off that level back into a gap up this morning. The question now is, where can we go long the market now? Okay, well, there's a few things to talk about. The first thing I want to discuss is the 661 level, which is the FOMC highs. The FOMC highs today, in my opinion, is the most important thing I'm watching. This is my bull bear pivot. If we are above the bull bear pivot, I am bullish, right? That's what it means, right? So at this moment, as long as we are above 661, I'm looking for this today, the pullback long to my demand zone, the FOMC highs over here, and the highs of that Monday session. Now, we do have one other level to contend with. The level to contend with is 662.60. It is at Tuesday's pre-market highs at 662.60. This is not my big level today, though. And in fact, this is not really a long spot for me today's session. The only long spot I have today's session is at 661. And remember I said the worst thing you can do today is come into a market like this and think that we're all bullish. Oh my God, the market's going higher. And what you do is you buy longs immediately. Let's not do that, right? If you're going to buy longs, you probably should have done it yesterday when we reclaimed 655, when we reclaimed 657, or even when we reclaimed 661 if you are a futures trader. But this morning we have gapped up and we are over key levels of support. So if we're going to look for longs anywhere, it's got to be either 661, which is my key support zone, or if you're feeling frisky, right, look for the previous all-time highs here, the Tuesday's highs here, which was 662.60 for a pullback long. And transparently, I don't really love that level. I want this level over here, the bottom one. Why the bottom one? Because it's the FOMC highs. What you learn over and over again is the market tends to pull back to these high volume nodes. That high volume node is 661. If we do pull back there, that's my long today. If we lose 661, then I think we should not be long the market. That's a very important thing. Here's the thing, okay? 661 is a nice long spot. If you see us lose 661, this is gonna be like trying to catch a cinder block with the baseball mitt, okay? You wanna try catching a cinder block with the baseball mitt? Do it, but you're probably going to get beat up a little bit. Okay, what's going to happen here is under 661, the cinder block is going to smack you in the face, and we're going to go back down to 655. We will see a very aggressive trend day down on the market if we lose 661. And I'm not saying it's going to happen today. I'm saying if it does happen today, respond to it accordingly, right? Know that we should not be long here because the market's probably going to sell into these lows back at 655. that's our inflection point today, is really just the FOMC highs. Above the FOMC highs, bullish. Below the FOMC highs, bearish. Now, going into today's session, you probably see sustained bull moves, right? You probably see us hold demand today. I would argue we probably do. I mean, time will tell, but I think we probably hold demand. Tomorrow, Friday, I think quad witching is going to be what really moves us the most, because quad witching is a very high volatile day. We'll talk about that tomorrow's session, but of course today, all you are doing is trading off the 661 level, above it bullish, below it bearish. On the ES chart, here on the ES chart, it is the same exact idea. 66.85 to, in my opinion over here, the Monday's highs here, 66.80. This whole zone on the ES is my long spot, okay? So if we can pull back to the zone today, 66.85 to 66.80, we should probably look for longs there, right? This is my beautiful break retest long entry off of the highs of FOMC, off of the Monday's highs. And of course, like SPY, if we do fail below this level, under the 66.80 zone, if you see us fail below here, then my argument is we should not be long, because this is going to turn into a short side play for the move back down into our FOMC lows, which was the big level yesterday, 6,600 ES. This was actually not perfectly 6,600 ES, but it was quite close. If you zoom into the price action yesterday and look to see where did the ES bounce yesterday during the FOMC. Well, the first thing we did was we rejected off supply, and then all we did was move back into a key demand zone, and we didn't quite tap it perfectly, but we did get very close to it, and we got bid up off this level, and that's what we're seeing right now, is a gap up after holding this demand zone. So this is the thing, is if we lose these highs over here, 6685 to 6680, then we should see the pullback into the 6600 level of the ES's chart, okay? So that, in my opinion, is what we're seeing today. I think we do have a lot of opportunities this morning, and there's a lot of volatility, so we should be looking for trades today, but you do not want to be long here, in my opinion. Just my 2 cents is if we lose that FOMC highs. That FOMC highs is a very important level today here on the ES and SPY chart, okay? Now, maybe if you see something like this, if you see us break down underneath it and then do a wham, then obviously, okay, this is a long, so don't just quote me on saying we can't go long if we're under 66.85, but what I am saying is if I were to go long, it would be here or it would be here, right? I'd be long at these spots here or long at these spots here on reclaims of that 6685 level here in ES, okay? That's what I'm seeing here on ES. Obviously, the all-time high level now on ES is just the pre-market high, 6720, and on the SPY chart, it is just simply 665 here on the S&P 500, okay? That's what we're seeing right now in the pre-market session, okay? On the Qs chart, here on the QQQ, you can see on Qs, we are overall stronger than the S&P 500. And remember, I said something to you guys before we even started talking. We started talking about the idea of our econ data and the fact that the FOMC was actually kind of hawkish, right? It was hawkish FOMC. In my opinion, and people would disagree with me, I don't care, but it was a hawkish FOMC, right? I listened to the whole thing. I understand. I can tell you it was not as dovish as people are making it seem. And if you want any proof of this, so the proof is in the pudding here, okay? Why is SPY selling off right now, right? Why is SPY selling off right now, but Qs are maintaining? Well, the reason why is because the reason why the whole market's gapping up is because of really Nvidia and AMD and the Intel decision, right? The Intel news this morning. This news is really what's maintaining the overall market, and that's kind of scary because when you have a few names popping and maintaining the overall market, that to me is not so good, because you want to see for moves higher, but for gap up on the market, if you have a gap up on SPY, a gap up on Qs, you want to see a broad-based rally. You don't want to see just one or two names popping up. You don't want to just see Nvidia gapping up. You want to see broad-based, or you want to see names like Amazon gapping up with strength. You want to see names like Apple gapping up with strength. But what are you seeing? You're not seeing that, right? So I think we should be on our toes today, right? We should be on our toes today, and we should see what is going on with tech and what is going on with SPY, because right now tech is stronger solely because of that Intel news. Here on Qs, you can see the pullback long is the same thing as SPY, right? It doesn't take a scientist to discover this, right? The levels are very simple here on QQQ, right? You can see we have 594 as the after hours highs here on Qs. That's your after hours highs. For me, it's a level. It's not a beautiful long spot though. My beautiful long spot, my big beautiful long spot is 591.50. 591.50 is my big beautiful long spot. If we can pull back there, I'm looking for longs there. That's my level. If we lose this level here at 591.50, right, 591.70 to 591.50, then just like the S&P 500, we probably fell back lower to the FOMC lows. The FOMC highs and the FOMC lows are the most important things to watch today's session, okay? If there's two levels to go over, it's level 1, FOMC high, it's level 2, FOMC lows, right? So that being said, does this make sense? I know this is a lot of, is this information overload? Hopefully it's not information overload. Does this make sense? Are you guys grasping what we're going over here? I know this is it's a bit of a confusing session, but I think I can't really simplify it any more than that. I think that the issue is that the market's bullish right now. Okay, the market's obviously bullish. We're bullish because we're above levels, but we're seeing a disconnect between SPY and Qs because of the FOMC meeting yesterday and the fact that chips are the only thing holding the market up. Okay, so not so broad base on the market, but we are seeing strength still, and we must still perceive this as strength until it shows us otherwise. That's the best way to put this. Okay, so let's go into our tickers today. Let's go over the first ticker of today's session. Let's talk about the firework INTC. So this is a firework this morning, and this is part of the reason why the market's gapping up. Okay. The reality is, though, if you were not already long Intel, I'm not going to sugarcoat stuff, right? I'm just going to tell you guys what it is. If you're not already long Intel, I think the boat has shipped and it has sailed, and you want to wait for a pullback long. Now, there's going to be a moment. If you guys remember, I came on this live one day, and I'm a long in Honey Drip as well on the long-term channel, but I came on live when we reclaimed this 23 level, and I spoke about the idea that just use this as your stop loss. You can see it right here, stop right there, 23 stop, and look for the build above 27, because if you clear 27, we're going to see 30 plus. The question now becomes, where are we going to on INTC? I don't think any of you guys should be chasing the stock today. I don't think you should be, right? If you're not long already, let this firework fade, because fireworks, they always come back down, right? They may look beautiful in the sky, right? But they're always going to come back to ground level, and that's when you get back in. Okay, so if you're watching for INTC, watch for the pullback long here at 30. 30 is your pullback long, break and retest level, and that's simply what it just is. Look for 30 pullback long. At this point, the next big level here in INTC is 36. That's all I'm going to say here about INTC. Okay, Nvidia obviously is the reason why INTC Intel is moving higher in the pre-market session. Nvidia is investing $5 billion equity stake in INTC. Nvidia actually is moving up higher this morning pretty aggressively, and this is also what's keeping the market together, right? Pretty decent gap up here. It doesn't seem like a big gap up, but it actually is quite a decent gap up here. It's a 2.5% gap up. We're back into a big level here. The big level on Nvidia is 176.50. This 176.5 level is the most important level to watch today on Nvidia. If we can break above this level, which you can see over here, just take a second and look at what I'm talking about, right? You can see the lows over here, 176, 176.5, 176.5, 176.5, 176, and pre-market 176. This is your inflection point. If we can break above this inflection point, I think we can see a break and retest move here above this level for a long entry back into 180. I am watching that today. If we can clear these highs, I'm looking for longs on the move back to 180. That's all I'm watching today here on Nvidia's chart. If we do pull back, the only pullback demand zone I have here is 172, right? But 172 is not a major bounce spot for me, because this chart is not really, even though we're gapping up this morning on Nvidia, it needs to clear this level. That's the only way I'm going to trade Nvidia longs today. I don't really intend to trade Nvidia longs back into band. It would be again like catching a cinder block with baseball gloves, right? You can do it, but you gotta be really surgical if you do it. Again, if you are watching for that long, it is again at the FOMC highs 172 to 171.50. That is a demand zone here. You can see demand, and demand. but it's not a very beautiful long spot, okay? I'm watching for the hold above 176.5. If we do break that level, I think we can get a sustained rally to 180. That's my top watch for longs. And if you're watching for longs off of a secondary move, watch the 172 to 171.5. But again, be careful, right? It could be one that fades below it if it doesn't hold. If it does this, you see it start to base like this, then absolutely long it, right? But if you see it just in one candle today, go like this, then don't go long, right? Just be patient on the long. Wait for it to build a base first, then go long up the FOMC highs, okay? So again, 2 levels here, this and this. Moving on, AMD. So AMD obviously weak this morning. The reason why AMD is weak is because of the chip news. Nvidia is investing in Intel, okay? Nvidia is not investing in AMD, and that's why the market's moving lower here in AMD. Now, the question is, what is AMD doing? Well, shit, okay? It may look weak to you, and it looks weak to me as well, but AMD is at support, okay? This is at a critical support zone. Look at what's going on here. 148, 148, 150, 150. Where are we this morning? We are at the 150 to 148 mega demand, right? This is the megalodon of demand here. We are at the megalodon of demand. Let's not be overly bearish into the megalodon of demand. This could very easily hold here and go right back into 160, and we would understand it. And why would we understand it? Because again, we are at the major retest level. The only way we can go short on AMD is if we break down under our megalodons of support, which is 148. If we break down under 148, then we can look for a sustained move back into the lower 140s, right? 140s, possibly even 130. But for this morning, I don't think that we should be overly bearish here. I think let's watch to see, does it hold here at the 150s? Because if it does, this could be another long opportunity for the move higher to 160. Again, don't quote me today. If AMD breaks under 148 and you're like, Brett, you said don't short AMD. No, I'm just saying don't short AMD as long as it's above 148. If it's above 148, let's not be bearish. But if we do lose 148, you can look for the bearish side move and move down lower. But right now, in the pre-market session, there is no indication to go short here. In fact, this to me, even though it's gapping down, looks like a long, right? This looks like a long to me. In fact, I would argue if you want a beautiful risk reward trade today, look for a 150 long entry with a $2 stop below an upside trade, right? If you're an equity trader, this is probably what you should be doing today here at AMD, okay? Just my 2 cents. Moving on the SMH chart, and still here 999. Wow. Thank you very much. Much appreciated. Don't be a schmuck and give back gains. No butterball trades. Yes, that is absolutely true. That is absolutely true. SMH. On the SMH chart, you can see here, big gap up, right? Obviously because of Nvidia, because of Intel, because of some other chip strength. This morning here on SMH, it's all about 310. 310 is your new level here. You can see it's that previous all-time highs, 310 to 309.50. That's your long spot today. As long as you're holding this demand zone, semis are still hot. If you lose 309.50, 310, then semis are no longer hot, okay? Let's go over some other chip names. Avgo. AVGO doing nothing. Did you guys remember we spoke about this yesterday? We spoke about the idea of Avgo under 357. It was a beautiful bull flag, and then finally it just slammed right under 357. At this moment, this is technically a bear chart now, right? As long as we are under this 357, what are we doing here? We're forming a beautiful left shoulder, head, right shoulder. This could be a head and shoulder formation here on the Avgo chart. Okay, so Avgo head and shoulders, use that 357, 358 as your stop. Look for a downside move back into 332. That could be a potential play today here on Avgo. Okay, let's move on, guys. Let's go over a few other tickers today's session. SMCI, SMCI doing nothing. Okay, SMCI has a level here at this 47. If I trade SMCI, it's because SMCI is breaking a big level. The only big level I have in SMCI is 47. The reason why 47 is so important is because if we do break 47, we are initiating a gap fill here, right? So I actually did review SMCI this morning, and I was looking at this level here. The only thing I see here is, again, 47 on SMCI. If we can break over this level, I think we could see a gap fill back into 55. So keep that in the back burner. But the only reason we should go long on this is if we are building above that 47 area, okay? Tesla. I'm reading the chat to you guys. I'm trying to read the chat as much as I can. I'll go over Hood. I will go over Hood. I'll go over Tesla. We'll go over MU. You know what? Let's do MU first. MU first, because that's obviously a hot one this morning. MU. MU level today, if you're trading MU, is going to be this 160 level. Okay, watch 160 for holds. That's your demand this morning. And again, would be the FOMC highs. 160 bounce. If you lose 160, we're going into the next big demand zone around that 155.70, 155.60 area, which would be the FOMC lows. So these are your two big levels here on MU. I think this is actually quite a nice stock. You can keep this on the watch, right? This is actually a nice stock to watch. Watch these two levels, level 1 for longs, level 2 for longs, okay? Back to Tesla. So Teslita. Tesla this morning, obviously, you're seeing that bull flag turn into sort of coming to fruition, right? What did I say about Tesla? Time and time again, I said, let's wait for the 396 pullback long. We spoke about the 423 hold yesterday, but I was not long Tesla, right? Tesla was not something I was watching for aggressive longs. It did it though, and I think we should understand that. Like, it actually is still strong. My levels on Tesla are 423 and 431 to 430, okay? Big level here at 423. If we do pull back today, this is your pullback long spot. If we do lose 423, I think this fades back into 412, back into 410, right? So if you're looking for shorts today on Tesla, it's got to be this. This is your short on Tesla, and this is your long on Tesla, right? So pretty much just the same level. All you're doing on Tesla is using the FOMC level and the Tuesday's highs and that Monday level, which is simply just 423, as your support. If we are above the support zone, we're bullish. If we're below the support zone, we're bearish. Simple as that here in Tesla. You could probably formulate some trade ideas on Tesla, especially if the market gets volatile. If you see the market fail under 423 on Tesla, this could be a nice fade trade. This should be a very beautiful fade trade for the trade back into 411, 410, right? You can fade this back into the FOMC lows from that Wednesday session, okay? Hood, let's go over a few more guys. Hood, Robinhood. On the Robinhood stock chart, you can see here, it is doing nothing. Why did you guys want me to do this? What do you guys want me to say here, right? There's nothing for me to do here in Robinhood. I think it's just like INTC, right? If you are a long Robinhood, you're good, right? Obviously, you made money and you're probably long this long term, and I think you just hold it, right? This is not something you want to go crazy, full port on 1D2E contracts today's session. I don't think it's what it is. I think Hood is a stock you want to own long term, and that's it. You just try to get in at a good price. The question is, where's the good price? I'll tell you one thing, it's not right here. I bought Hood at $8 a share, okay? And I'm not saying that to make it seem like, to kind of toot my own horn here, but I am saying if you're going to buy Hood, you just own it, right? You just own the share long term. You buy it at a good price. I would buy it at 93. If you pull like the 93, I'm looking for pullback longs there, okay? So that, again, would be my main long spot on Hood. But as of right now, in the short term, it's extended, right? This is very extended. Obviously, look at the chart here. It broke downtrend. It's very extended to the upside. At this point, it needs a pullback, okay? That's just what it is here on Hood, right? Let's go over a few more, guys. It's 9:01. We have some time. Amazon. Whoa. Amazonian. Scamazon, right? A little Scamazon action here this morning. So Scamazon is, and this is part of the reason why I want you guys to understand things. I want you guys to see, I want to show you what I'm thinking and not even just like my bias, but just kind of get a read of the market. And something that we're noticing this morning is the read of the market is that there is a clear discrepancy, right? You have some names strong and some names weak. And the names that are strong are mostly because of the chip news. Again, I'm kind of repeating myself here, but that's what you're seeing in Amazon. It proves this to us, right? Look at Amazon's chart. It is doing nothing. Amazon does not look like there's a trade here for us, right? And we can't just trade this stock every day. We only trade the stock when it's doing something important. Now, today's session is doing nothing, right? 232 is my spot here. If we're above it, bullish. If we're below it, bearish. But I think we should be careful of the stock for now, okay? PYPL, PayPal. Mike's in PayPal. I'm in PayPal. My average on PayPal is 70 per share. So I actually still own PayPal. My average is 70. So if you get in right now, you're getting it at my average. The level that PayPal has to beat is 70.7, right? This is a very important level. It may seem like a very bizarre number, but 70.7 is a huge inflection point. Bam, 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 bam. This is the smackdown level, right? If we're going to see upside here in PYPL, PayPal, you need to see us clear out the smackdown level. If we clear out the smackdown level, I think we see 75 and possibly even the big downside highs, which is 80. So watching this today, PYPL, PayPal, above 70.7 for longs. If you do clear that level, I think we're okay, right? But again, you can see here, the level on the daily time frame is even more apparent. You can see, look how important 70.7 is. Very big daily level. If it can clear above it, upside on this chart. TGT, so Target, I mean, nothing to say here in Target. Target's at demand right now, right? This is my big demand zone on Target. I am actually down. I'll show you. I longed Target here at 100. I am down right now about 11%, okay? When I longed Hood in the chat, you can go back into the long-term channel and search, go to long-term invest, go to long-term investment channel in Honey Drip, right? Search Hood and then search Brett. At one point, during 2024, I was buying Robinhood. I was buying Hood stock at, I'll show you where it was. Sorry, it was like over here. No, where was it? It was like over here. Okay, it was like over here when I was buying Hood stock. I bought Hood right there. That's where I bought Hood. I didn't get the best average. I was buying at 12. I was buying at 10. I was buying at 8. They called me stupid, and then I did this. Sometimes you have to be in drawdown before the stock moves in your favor. Okay, so Target. You can call me Butterball, you can call me Porky, right? You call me whatever you want to call me, right? I am down on this right now. At some point, I probably will be back over here at 173, and you're going to be then asking, Brett, where do we long Target? And I'm going to look at you with a weird face, because I'm going to say it should have been over here, right? Target, again, you don't have to do this. This is just what I'm doing. There's some trades that I'm still red on, that I've been red on for years, but Target's what I'm buying, okay? Let's move on, guys. Let's go over a few more tickers. BULL, Bull, Bull stock. On the Bull stock, it's probably just following Hood here, but actually it's not. It really isn't. BULL stock, 12 is your big level. That's your big support zone. If you're looking for BULL, watch that 12.0 level. That's the only thing I have here on BULL. Guys, thank you all for joining in. I think it's a beautiful Thursday session. Let's have a good trading session, and I'll see you all for live trading in 20 minutes. Have a happy and safe trading session. And yes, look, someone said Target's a lost cause. You don't have to, right? It's just, I just let you guys know what I'm doing. Right? There are some long-term trades that I am in that I've been read on for years. PayPal is actually one of them, right? So, I mean, take that as you will. But I do like Target long-term just because of the books, not because of their corporate dynamic, okay? Thank you all for joining in. I'll see you guys all for live trading. Bye, guys.